Okay, so we are finally going to start talking about what actually is the process when you file taxes. We already talked about what it means by a standard deduction. Now, as we go through this, we will see the standard deduction in play and what that does for your taxes, as well as we're going to see, again, the actual process that happens mathematically when you file. So let's go ahead and start in our notes. Now, you have this, again, this is the first slide, obviously, of the notes. 7.3a happens to be on page, where'd it go? 81. Now, we do need these documents on page 82 for all of the questions. So, there we go. This is on page 82 if you happen to have the notes packet. Now, what we have here, when you file your taxes, you have to have all of your tax documents. I had to wait to file my taxes, even though I had my W-2. I still needed my other forms for owning a house, for having rental income. There's a health insurance form. There's a couple other things. I paid tuition last year to a community college. There's a tax form for all of those things. So these two tax forms, this is again W-2, and how you know, even if you don't see where it says W-2, is because it tells you the income for a job. This little setup here where it says your wages and tips, your federal tax, wages, again, they'll say Social Security, Medicare tax. This is the W-2. This down here is a different form for interest. So if you have a savings account, we're going to learn this. We skipped this unit. We're going to come back to it. In the banking unit, if you have a savings account, you actually earn interest on a savings account, but that's income, and so it has to get taxed. So you would get a form for that for your taxes. This is going to count like income, and it's going to be taxed the same way. So we're going to keep referring to these two documents. Just make sure you have them there. This is, again, page 82. Let's go ahead and pretend we're filing this person's taxes. So it says Elizabeth Allison is a single food editor for a magazine. She has received a W-2 from her employer, we just said that, and a 1099 form from her savings bank. So that's what that is. 1099 forms are for very specific types of income. So that form in particular was for interest. There's another form for if you get money from college. There's another form for if you have stock market investments, stuff like that. It says, what is Elizabeth's total income for the year? So when they say her total income, we need to add her incomes together. Now we saw down here, hopefully you can see, that's the interest income. See if you can read the W-2 and find out what her income from her job was. Well, again, box 1, wages, tips, and other compensations, you see it repeated a couple times throughout, but this is your income. Box 1 on your W-2 is always your income. So all you gotta do is add those two numbers together. I'm gonna copy them over. So total income, you have to add any money that you got. Technically, it's supposed to be anything, but realistically, it's anything that you have a form for. So take a moment, go ahead and add those together. Okay, we got 6, we got 5, we got 15. Okay, so this is the total income because they had income from the job and they had income from the interest from their bank. So total income, you need to add together all incomes. So we'll keep that in mind when we do it again. So it says, while filing her taxes, Elizabeth claimed the single standard deduction, which again, single standard deduction in this case is, oops, I need to change that. I just realized. I'll actually leave it. This is updated nowadays. It's 12,800, but we'll leave it there as 12,400. I will normally tell you what that is. This is the single standard deduction. Again, it is actually 12,800 nowadays, but we'll leave it as that for the purpose of this problem. Remember, that's what the government says. You know what? It's hard being a person. It's hard living and having to pay for things. We will pretend you didn't make that much money. Yeah, you made more, so we're going to tax the rest, but we'll pretend you did not make this much money. Now, we have some other specific deductions as well. We've got this deduction and this deduction. It says, what would be her taxable income? So, again, we talked about this in the key terms, but your taxable income is your gross income, which we just found on the question above. This is equals. minus deductions. Again, a tax deduction decreases your taxable income. We learned something later called a tax credit, which decreases your taxes. That's different. So we have 1, 2, 3 deductions. Go ahead and take the gross income and subtract away these 3 things, and that will now be your taxable income. So we have 84,556. I've got minus 12,400. I've got minus 6501.55 minus 757.05. Again, what tax deductions are the government saying, you know what, you spent this money on important things. If it's the standard deduction, you spent that money on just living, on being a human, right? If it's a property tax deduction, that is for a house, and that's important money. And then a student loan as well. You spent these things on important things. So you know what? We're going to pretend you didn't even make that money because you spent it on important things. So this is actually how much is going to get taxed, because they're going to pretend that you didn't make a certain amount of money because you spent it on important things. So this is now their income that is actually going to get taxed. So we're going to keep going from here. We are going to come back to this number. We'll just keep this in mind. This is the taxable income. So it says based on the W-2. So be careful which form you're looking at. How much did Elizabeth pay in federal taxes throughout the year? So look back to the W-2. See if you can find the box that says federal taxes. Well, that is right here. That's it. All you're doing is reading. So that's how much tax she has already paid. 15,884. There you go. We just read it, right? So that is, again, how much she has already paid. But now that we know her taxable income, now we can see how much she should have paid. Ah, crap. Forgot about this. I'll have to cut this part out of the video, but that's okay. I know I should have checked this. Okay, so again, backtracking here, I had to cut a little part of the video because I made a mistake. I forgot to update this table. Because the standard deduction has changed, this puts her into a lower income tax bracket, I guess you can say. It puts her into lower taxes. And so I have the wrong table here. If you're looking at your notes packet, you will see 65,000. Look at my screen. I have the wrong table for you in the notes. So just look here. So again, this is how much she should have paid. And I'm going to, or sorry, did pay. This is how much she has already paid. Now we are going to figure out based on her taxable income and the tax table. So as you guys are doing these questions, it tells you what information to reference in order to get your answer. So it says based on her taxable income. So let's look back. This was her taxable income. So I'm going to copy that over, 64,897.40. And the tax table. So again, like I said, I made a mistake here. The standard deduction increased, which means this person is now in the 64,000 range. So look here, you have the wrong table in your notes. So she is single. This is her taxable income. I want you to look at the tax table and figure out how much she should have paid. Take a moment again, look at my screen, not your notes. Well, she's single, so you should be looking in this column. And then we have 897. So that's going to be 897. That should be here. 897 is in between 850 and 900. So there's our answer, 10,063. So 10,000, right? Yep, 10,063. This is how much she should have paid. So again, the W-2 form tells us what she did pay. The tax tables tell us what you should have paid based on your taxable income, right? So here's the last step in filing our taxes. Again, this is the actual process you go through when you file your taxes. It's obviously all through software, but this is the order that things happen and that they ask information for you and stuff like that. So it says, does she owe more taxes or does she get a refund, and how much? So we're going to say owe or refund. So you have to be careful on which number is which. This is what she did pay versus what she should have paid. Did she pay too much or too little? She paid too much. If she did pay $15,884, but only should have paid $10,000, she gets a refund. How much is the difference between them? So go ahead and subtract those. 84 minus 10,063. Oops, 15,884 minus 10,063. Okay, we get 5,821. So this is her refund check. She gets that mailed off to her all in one check, or it goes straight into her bank account because she paid too much in taxes. So that's the process of what goes on when you file your taxes. This is the exact order. We're going to write this down later. You find the total income by adding all your incomes together because they got to see how much is being taxed. But again, not everything is being taxed. We have to take away the tax deductions so that we can see how much income is actually going to be taxed. Then we compare what you did pay based off the W-2 to what you should have paid based off the tax table to see if you owe or get a refund. And again, she's getting a refund because this is the bigger number. If this number were bigger, that means she didn't pay enough and she would owe. So here's what we're going to do. We're going to do this whole thing one more time on the Check Your Understanding. I'm going to give you a couple hints and kind of walk you throughout. But this is going to be the same process. Total income, taxable income, how much they did pay, how much they should pay, do they owe taxes or get a refund. So refer back to the example we just did as you do this. So real quickly, for this one, it says the owners are married filing jointly. Determine the total gross income. So this is still the first step. If you look at the documents that we have two W-2s. We have one for Robin Omar, and we have one for Kenya Omar. They're married. When you file jointly, you need to add together their incomes. So let's go ahead and get going with this example. Read where it says both of their incomes and add them together because they're married filing jointly. Well, this is Kenya's income. There's Ruben's. So I'm going to do this right here instead just so I have it. This is 65,120.97 plus 52,126.76. So they don't have any other special income. They just have their two incomes. Sometimes that'll happen, right? 126.76. Oops. Okay, you should have gotten 117,247.73. So here is their total income. But again, not all of it is going to be taxed. So let's read this. Now, again, in the homework, I will tell you what these things are, but it says they claimed the standard deduction and the maximum amount for property and state taxes, which ends up being $10,000. Now, we wrote this, this is on the slide again earlier, the standard deduction, but they are married filing jointly. So looking back here, this is the standard deduction for married filing jointly. So we're going to go ahead and drop that over. 24,800. So here are their two deductions. Go ahead and find their taxable income. Again, taxable income, you need to subtract from the total income deductions. Deductions decrease your taxable income. Again, this is the government saying, you know what, we're just going to pretend you didn't make this much money. We're going to pretend you didn't make 24,800, and we're going to pretend you didn't make 10,000. Because you spent them on important things, and so we're not going to tax that money. We're just going to pretend you didn't even make it. Okay, so we get 82. Oh, dang it again with this. 82,447.73. So here is their taxable income. So we're going to come back to that in a bit. So read what it says to reference here. Based on the W-2s, how much did they pay in federal taxes throughout the year? So again, little hint here if you're filing jointly. Your taxes get added together that you've paid. Because they are filing jointly, I'm going to go back to the W-2s here in a second. You need to add together the federal taxes. So let's go back to the W-2. Read what we should know because we saw it before. What box says their federal income tax? We're going to add those together. Okay, well, there's the federal income tax. There's the federal income tax. We are going to add that together here. So I've got 8765.99, and I've got 6198.65. Okay, I've got 8765.99 plus 6198.65. Okay, so here's how much they've paid in taxes, 14,964.64. Okay, I'm going to copy that over here. 14,960, whoops, wrong one. 14,964.61. So again, when you file jointly, your incomes get added together and your taxes get added together. So once again, guys, keep this straight. If it comes off the W-2, that's how much you did already pay. Now we're going to see, based on their taxable income in the tax table, which again, I'm going to have to change because I just need to fix this in the future. The standard deduction changed, so that put them into a different table. So I'll fix that in a second here. So based on their taxable income and the tax table, how much should the OMERs have paid actually? So again, here's their taxable income. Give me a second to fix this because I have the wrong table here. Okay, so once again, guys, I can't believe I haven't fixed this yet, but the table you have in your notes is wrong. You are going to look here. So based on their taxable income, we have 447. Let's make this smaller again. There we go. 82,447.73. That's their taxable income. If you need to write, make sure you have it written down. And we're going to look at the tax table here. Go ahead and take a moment. They are married filing jointly. 447, that's kind of the number we're focusing on. Let's see if we can tell what they should have paid. Read the table. Okay, well, married filing jointly is here. 447 is what I'm focusing on because all of these are 82,000, so I don't need to focus on the 82,000. That is going to fall right here. 447 falls in between 400 and 450, so here's my answer. That is how much they should have paid. $9,714. Should have paid. Again, the W-2 shows us your estimated payments that you made throughout the year. The tax table shows us what you should have paid. So what do we think? This is how much they did pay. This is how much they should have paid. Are they going to owe more taxes? Do they get a refund? This is actually refund again. I probably should change this problem so that you can see owing. Again, owing is this number is bigger, but you still subtract regardless. So it doesn't matter which one is bigger, you are going to subtract because you are either going to owe the difference or you're going to get a check for the difference. 964.61 minus 9714. This is 5,250.61. And again, be careful when you do your homework. I really should have done an example here of owing. This number would be bigger for what they should have paid if you would owe taxes. So I know that's a lot, but that is, again, the process that actually happens of going through and filing your taxes. When you do your assignment, you're going to do one more example just like this, following it through. So pay close attention as you do the assignment to, again, where you should be looking. See what I highlighted here? This tells you what information to use and where to look to get your answer. There really isn't too much math, right? It's just adding and subtracting. Really what these questions are hard, why these questions are hard is you have to follow directions based on the W-2, based on the taxable income and tax table. You got to pay attention to those things. But let me know if you get stuck, because the answers that you have keep kind of trickling down. If you mess up in the beginning, you're going to get the end wrong. So let me know if you need any help as you do this.